Welcome to The Deep Dive. We're the show that takes the sources you send us, digs deep, and pulls out the insights you really need. Today, we're looking at something brewing in Kenya's financial tech scene. It involves Safaricom's new money market fund, Ziidi. So our mission here is to figure out why this product, Ziidi, which seems pretty successful on the surface, is causing such a major stir. We're hearing about formal complaints from competitors, heated debate. We want to get into the details, look at the allegations, and understand what it all means for investors and, well, for the market itself. The big question really is, how does a product grow so fast but also attract so many, let's say, red flags? And what could this mean for digital finance down the line?
Okay, let's unpack this. First up, probably the most obvious flashpoint, transaction fees. What's the deal here?
Yeah.
Why is this specific point causing so much friction?
Right. Well, the key thing, and it's quite stark, is that Ziidi users pay absolutely zero M-Pesa fees when they deposit or withdraw money.
Zero. Now, compare that to others in the space. Think Citon, Etica. Their users are paying M-Pesa charges. Sometimes it's 5 shillings. Sometimes it's, over 100 shillings per transaction.
Wow, okay.
And this zero rating, it's exclusive to Ziidi. That's the crucial part. Other MMFs, they also rely heavily on M-Pesa, but they don't get this deal.
So it's not an infrastructure-wide thing then?
No, exactly. And that's where the implications get serious. It's not just about saving users a bit of cash, though that helps Ziidi grow, obviously. It's being framed by competitors as, well, a restrictive trade practice. They're arguing that Safaricom, because it dominates mobile money with M-Pesa, is essentially blocking fair access and fair pricing for its competitors in the MMF space. This, they claim, goes against Kenya's Competition Act.
Okay, so this isn't just like quiet grumbling in the market. These are formal accusations we're talking about.
Yes, absolutely formal. Multiple money market funds have actually filed official complaints with the Competition Authority of Kenya, the CAK.
And what's the core accusation, legally speaking?
It boils down to Safaricom's dual role. They run the essential platform, M-Pesa, that everyone needs. But they're also competing in the market using that platform through their partnership for the Ziidi MMF.
Right, the platform owner is also a player.
Exactly. And this link with the fund manager behind Ziidi, it raises questions about, preferential treatment, unfair market access.
Yeah.
Basically, are they using their M-Pesa dominance to give Ziidi an unfair leg up? It's what lawyers call vertical integration abuse.
Vertical integration abuse. Can you break that down a bit?
Sure. Think of it like this. Safaricom owns the main highway M-Pesa that all the financial delivery trucks need to use. Then, Safaricom starts its own delivery company, Ziidi, and lets its trucks use the highway for free while charging all the other delivery companies a toll.
Okay, that makes sense.
So analysts are worried. They see a real risk of market distortion here. It can make it incredibly hard for other MMFs to compete fairly, even if their products are just as good, or maybe even better in terms of returns.
So, fees, market dominance. But the concerns don't actually stop there, right? I heard there were issues from the user side too, something about transparency, how people ended up in Ziidi in the first place.
Yes, that's another major layer to this. There are quite a few reports, allegations really, of what people are calling forced migrations.
Forced migration?
Yeah. Essentially, users of Safaricom's older MMF product, which was called Mali, found themselves shifted over to Ziidi. But the process seems to have been, well, messy. Some users say they weren't aware it was happening. Others ran into technical problems or got confusing messages on the app that didn't really explain the shift clearly. And there's still a lack of clarity, apparently, about how exactly the funds were moved or if the underlying fund manager changed. It's all a bit murky.
It doesn't sound great for building trust.
Not at all. It's definitely shaken investor confidence for some. People were asking questions about their data, about consent. Did they actually agree to move to Ziidi?
Yeah.
And what happened to their original Mali investments? It creates uncertainty.
So, okay, we have these serious issues swirling around the fees, the market power, the user migration questions. But Ziidi is growing incredibly fast, isn't it? How does that rapid success play into the calls for regulators to step in?
It's precisely that rapid success, combined with how it seems to be achieved, that's raising the alarms. I mean, the numbers are impressive. Over 1 million users, something like 6 billion Kenyan shillings in assets under management already. That's huge, very fast growth.
Yeah.
But for the smaller MMFs, they look at that growth and they see the zero-rated M-Pesa fees, and they feel squeezed. They're worried they're losing customers, not because Ziidi offers better returns necessarily, but because of this platform privilege, as they call it.
The free highway access.
Exactly.
Yeah.
So this is why we're seeing increasingly loud calls for action. They're targeting the central bank, the Capital Markets Authority, the CMA, and of course the Competition Authority, the CA.
And what are they asking for specifically?
The demands are pretty clear-cut, actually. Either make the zero rating universal so all MFs using M-Pesa get the same free transaction deal.
Level the playing field that way.
Right. Or the alternative is require Safaricom to charge Ziidi the same M-Pesa fees that everyone else has to pay.
Make their own truck company pay the toll too.
Precisely. The fundamental worry is that if things stay as they are, it could stifle real innovation and limit choices for investors in the long run. You end up with one dominant player, not because of a superior product necessarily, but because of platform control.
This definitely feels like it's building towards some kind of regulatory decision, maybe even a showdown. Where do things stand with the investigations now? What could actually happen?
Well, the CAS, the Competition Authority, has confirmed they are reviewing the complaints. That's step one.
Okay.
In terms of potential outcomes, there's a spectrum. It could range from the KA ordering Safaricom to provide equal M-Pesa terms, pricing and access, to all licensed MMFs. Or they could impose fines or other penalties if they find unfair business practices occurred.
And the more extreme options.
There's even talk, though it might be less likely, of forcing some kind of structural separation. Forcing M-Pesa and Safaricom's financial product partnerships to operate more independently to prevent this kind of alleged self-preferencing.
Wow, that would be significant.
Hugely significant. Whatever the outcome, though, this case is being watched very closely. It could really set a major precedent for how dominant digital platforms can, or maybe can't, leverage their position to compete in adjacent markets like financial services, not just in Kenya, but potentially as a model elsewhere.
Right. It really highlights that tension between letting tech giants innovate and ensuring the market stays fair for everyone else. So as we wrap this up, it's clear Ziidi isn't just another app. It's really sitting at the intersection of financial innovation, market competition, and platform power in Kenya.
Absolutely. And it's important to stress the competitors lodging complaints frame it not as sour grapes about Ziidi's popularity, but as a fundamental issue of fairness. They argue the exclusive fee waiver, the way the product was rolled out, combined with Safaricom's huge market share with M-Pesa. It all creates an uneven playing field, one that they believe might actually break competition rules and could ultimately harm, not help, financial innovation and consumer choice.
It's fascinating. As Safaricom pushes deeper into fintech, you can bet everyone, the public in Kenya, the regulators, investors, other companies, they'll all be watching how this plays out very, very carefully.
Which leaves a big question, really, for you listening to consider. Looking ahead, do you see Ziidi as ultimately being a positive disruption, something that brought easy savings to millions? Or could it become a kind of warning sign about what happens when platform power isn't kept in check, especially in developing economies? What path should Safaricom take now? And, maybe more importantly, how should regulators balance encouraging innovation like Ziidi while still ensuring genuine competition can thrive? It's a tough balancing act.